Welcome back. You're still tuned into Midcap Radar. Puravankara, that is the stock on our radar, released its Q2 business update. The pre-sales during the period were up 4%. Ashish Puravankara, who is the managing director at the company, is joining us now to discuss more. We'll understand their FY26 sales outlook going forward. Will they now expand via joint development, redevelopment, or more organic land buys? And the debt position of the company, considering that they are also on an expansion spree. Ashish, good afternoon. Thank you so much for joining in. The uptick that we saw this time in pre-sales, 4% higher, was it pricing-led or did you see similar increase in volumes as well? Can you give us a breakup of that? And what was the volume growth this quarter?
So in terms of pre-sales for Q2, we've achieved about 1,322 crores of pre-sales, which translates to about 1.5 million square foot, which is again about 4% higher year on year. In terms of customer collections also, I think we were up. We had a customer collection of almost 1,047 crores. For the half year, we have achieved about 2,445 crores worth of pre-sales, which translates to about 2.75 million square foot and customer collections of about 1,906 crores. Very important to note that all these pre-sales numbers have actually come in from ongoing sustenance projects. We still have to see the benefit that in terms of sales contribution from our new launches, which are all slated for Q3 and Q4 of the year. From Bombay, from Pune, from Bangalore and Cochin markets.
Okay, so pre-sales right now is not factoring these new launches that you've planned. Ashish, afternoon, Q3, Q4 then, what is the anticipation in terms of pre-sales numbers that we could expect? Could it go to the double-digit mark? And overall also, have you already started seeing the pre-sales coming in from the redevelopment projects as well? If you could just give us an indication there.
So in terms of the new launches that we've planned, it's about 15 million square foot over the next 12 to 15 months. I would assume about 65% of that we should be able to achieve, I think, by March itself. So if you take that number and if you see our past history in terms of pre-sales of newly launched projects, we've been able to get almost a 70 to 80% of the phase that's been launched in the first 2 quarters. So that contribution should be quite healthy. Let me put it that way. In terms of redevelopment projects, as of now, we have not launched any, but we should see a launch in the next 2 months. All approvals, which is Lokhandwala, Pali Hill, which is Bridge Candy, as well as I think Malabar Hill, etc. I think we should start seeing the launches starting from 2 months from now. But all approvals are in place.
Ashish, how does it differ for a developer when you're going to launch, say, a redevelopment projects? What's the impact on the balance sheet in terms of cash flows? Do you need more capital for doing this? If you can explain that to investor, because now that will start showing in your books as well.
Sure. So pre-sales mimic what we traditionally do as joint development. So there is no huge upfront capital investment in terms of buying a land outright, but it is essentially your approval costs. And then once you get your approvals, the corpus fund that we contribute to the society, as well as their annual rentals as per our each transaction. So it's typically about 10 to 15% of the land value as opposed to buying a land outright. So very low on capital upfront investment for society redevelopments.
Okay. So how much will redevelopment be as a percentage of your overall portfolio, say 2 years down the line?
So currently what we've secured is about 4.25 million square foot in Mumbai for redevelopments. The GDV of that is about 10,500 crores. But we are actively growing and quite aggressive. We are in fact now pitching for at least 6 more projects as we speak. But I think the brand has been received extremely well in the West region. So in spite of healthy competition, we're able to secure these marquee locations. So we should see this number only grow.
Okay, you'll see this number only grow. But Ashish, from here on, so in terms of expansion plans that one could watch out for, would it be more JDAs? Would it be buying land, redevelopment side? What would the focus area be? And how much cash would you require for expansion? How much do you have in your books? What is it that we're watching out for now?
So I think if the half year gone by is any indication, I think we have done aggressive business development where we have secured projects, 2 in Bangalore and 2 in Mumbai. with I think a square footage of about 6.25 million square foot, with a GDV of about 9,100 crores. In terms of strategy, I think the combination between outright society redev or joint development, I think the micro market in the city defines it. So, for example, if you have to grow within the Mumbai city limits, I think the biggest opportunity here is the society development. But now, if you go to the outskirts, like for example, Thane, etc., there you're able to secure vacant pieces of land, industrial land, etc. So that typically will be an outright. An outright is always, while there is an upfront investment to buy the land, but is always a cheaper option in terms of costs than a joint development.
Okay, we take that point. Ashish, then what's the kitty set aside to take up the expansion plans? What is the updated debt number? What would it look like by the end of this year?
The net debt, I think, at the end of Q1 was about 2,845 crores. In fact, there was a net debt reduction of about 128 crores. I don't see that number on the residential front going up significantly. It would all depend on the commercial portfolio. So currently, we're building about 3 million square foot of commercial office space in Bangalore. So the construction finance required to complete those projects, would lead to some expansion in terms of the debt number. But as they get completed, which is slated for anywhere between I think March and April of this year, and you start leasing, you convert that debt into lease rental discounting at a much cheaper cost, which is generally the format for commercial development. But on the resi front, I don't see that number going up too significantly.
Okay. Ashish, just one thing, pre-sales FY26 target, what would that be? If you could just quickly give us that number.
So we don't give any guidances per se, but I think now, so currently we're building about 36 million square foot is what we have under development, of which we have opened up about 17,500 crores for sale in terms of phases. We have already pre-sold about 9,700 crores out of that. So if you take that number into account and add the 15 million and look at our track record in terms of sales, you should see a good jump.
All right, take that point, Ashish. Thank you so much for joining in with your thoughts and insights on the business going ahead. But a quick note for our viewers now. As you can see on the screen, there is a money control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, which include both current and historical financial statements, price charts, and technical indicators for each stock as well. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.